We are live. This is Travis Witherspoon from Carter Cow Trading, Trade with Travis on YouTube. Hopefully everybody's doing very well on this Friday morning as we get through and take a look at some overall trading opportunities. Do apologize for yesterday not being able to go through the overall trading. Someone ended up knocking off my internet, so I had to have AT&T come back and be able to get my internet back working. So I'm actually using a different way of being able to go to the internet today. So we'll go ahead and go through that. But once again, there's a lot of stuff that's done happen over the course of the last couple of days. I'm going to go through it. And we'll go from there. So I'm not a CTA, so I'm not going to tell you whether to buy or to sell. What I'm going to do is teach you education, and from that education, you can be able to make your own informed decision. Understand that Forex involves risk. It involves risk of being able to make money. Also involves risk of being able to lose money. So please keep that in mind. Understand that past performance is not indicative of future results, which means that if you end up making money yesterday, it's not promised that you're going to end up making money today. So with that being said, showing myself onto the screen. Hopefully everybody's doing very well. Hopping onto the screen, here we are on Instagram. Everybody, hopefully you can be able to see me. Here we are on YouTube. It should be showing up now, and Facebook should be showing up now. There we go. Hopefully everybody ends up having a very good week for still overall trading. Hopefully your trading ends up going better than mine, because obviously we end up talking about a few different pairs in the way that we wanted to be able to trade them. And at this particular point, it has not happened the way that we overall expected. But that's the reason why we have get out areas. That's the reason why we have equity management, because at the same time, when situations happen like this, you have to be able to protect your money. And the only way you can be able to ensure that you're going to put yourself into the best position is by being able to protect your money, because you may have the best perfect setup, but sometimes the market just doesn't go your way. And that's what happened at the beginning of this overall week, going into everything. We're going to talk about it, and we're going to adjust, and then after that, we'll make a decision on what we need to do, like always. So let's go ahead and take a look at it. So yesterday, unemployment rate ended up happening for the Swiss franc. We looked at the overall news. We see that that was actually good. We looked at, we end up seeing continuing jobless claims end up being good for the US dollar, but the initial jobless claims were negative. Now, remember, typically that news comes out before non-farm payroll. Remember, non-farm payroll actually ended up happening last Friday. So we looked at non-farm payroll, that number was negative. We ended up looking at initial jobless claims, that number was negative. And the US dollar, I mean, obviously now we see how it kind of reacted throughout the overall week, and we see that this market is actually moving towards the negative side anyway. I see that I'm a little frozen on, okay, there we go. A little bit later on today, we're going to see unemployment rate for the Canadian dollar. We're going to see net change in employment. So let's take a look at oil. We'll look at the Canadian dollar as a whole and see if there's any type of trading opportunity, and we'll be able to go from there. Remember, Fridays are typically days that I don't necessarily trade all that much. I am looking for a position. We'll see if we can find something. If we don't find something, then quite frankly, we're not going to trade. Try to lick my wounds when it comes down to what ended up happening early this week, and then after that, bounce back and get ready for next week, like always. So let's take a look at it. U.S. dollar index. As we go through, we end up saying all last week, we had this market move to the upside. Market is considered to be bullish. It ended up breaking the trend line a couple weeks ago. We end up having a very good week of trading last week when the market ended up going up. The market ended up retracing down, put us in the buy zone. We got a counter trend line break, and we said that the market was going to end up retracing. And from that retrace, we wanted to look to be able to buy. We got a 2-hour low on most prices. We end up looking to buy. And then after that, market end up dumping from here. So there's two things to be able to ask yourself. Is this market in consolidation, or is this market truly bearish? Right now, we can see that this market has not broken a trend line on the 2-hour at this particular point. Even though it showed flashes that it would. Yesterday, I seen when I was with my son, which his birthday was yesterday, and we was taking him over to the zoo and everything else like that. I seen that we was up at certain points, and then after that, look at it later on today, we see that this market has made a new lower low. So the only level that we can kind of pay attention to see if the dollar is going to end up being bullish. it's going to end up being right around this 12,002 level. And I'm going to put a red line right here at the fractal low. If this market goes below 12,002, then the market is going to end up keep on falling. Now, the question is, where's it going to fall to? Because if it breaks 11,093, then the market's going to be truly bearish again. Oh, excuse me. And from there, we're going to end up seeing this overall bearish movement, kind of like what ended up happening since the beginning of March. And we have to make a decision on what we need to do from that overall position overall. And that's what we have to pay attention to. If that happens, then the market's going to end up being bearish, and then after that, we have to look for sellable positions. If that doesn't happen, then after that, we may end up finding some buying positions at the beginning of next week. But we go to the 2 hour. Let me show you what we looked at. Overall, we got in on this counter trend line break towards the upside. Got a retest. Start getting in on these pairs right here when the market ended up breaking up. Then after that, it just rejected. From that rejection, it ended up going below a point of control again and then rejected again. So once again, 12,002 will probably end up being a position that I would kind of pay attention to if I'm looking at being able to buy, but it has to prove it to me right now. It has not proven it to me. And it has made me lose a little bit of money based off of that overall movement and based off of that thought process. So obviously now we're in a position like, hey, if this is going to be right, then you're going to prove it to me, or I'm just going to go to different pairs, obviously. And that's the thing that we'll do from there. Look at oil. Oil has went through an ascending triangle. From that ascending triangle, they ended up breaking out. It retested. It broke to the downside again, gave us a chance to be able to make money last week. Since then, the market has pushed back up. Now, it fell down in a predetermined area, right around the $37 a barrel area. Now, the market ended up pushing up towards $41 a barrel. We ended up talking about this a little bit earlier and saying that was $41 a barrel basically a point of resistance. And currently, right now, it is proving to be a point of resistance at this particular point. So, stochastic at this point does not mean anything anymore. If we're looking at consolidation, it is just buy at resistance, sell at resistance, buy at support. Buy at support, sell at resistance. That's the only thing that matters. So the higher that it gets, and if it gives you a counter trend line break or something like that on a 2 hour that you can be able to sell very high or very close to the $41 a barrel mark, then after that you should be good. Look to sell it down to 37 if that gives you the opportunity. I will wait until the news for the Canadian dollar kind of comes out to kind of give yourself a better opportunity. But anywhere close to $41 a barrel is very good right now. Currently, you'll be about up 18 points on this overall move if you are already in when it comes down to this particular position. So oil, I'm going to say right now is temporarily bearish, but it is in consolidation, so anything can happen, like always. All right, so let's take a look at gold. With the movement of the US dollar being bearish, gold is starting to pick back up. We have a push towards the upside. We have to go back and kind of take a look at what ended up happening based off of this old movement. That will kind of tell us where we are when it comes down to this upside movement. We can place in a fib at this particular point right here and see where the market is going to end up going. The market has broke past 1921 and is expected to go to 1965. Force this overall movement. Drop down to the 618, so it's a very good retracement area. The market is close to the B. The market is not in the buy zone, so it's kind of tough to be able to say, hey, let's look to be able to buy. I would kind of wait for a lower price to be able to get in if you could. We'll take a look at the 2 hour. You take a look at the 2 hour, you see that the market is overextended as well for this movement to the upside. I'm going to get, but this market would be truly bullish if it breaks past 1921. I'm going to get rid of these fibs to the downside. Quite frankly, it doesn't matter anymore. We did see that it broke an A, but it has retested back up. So once again, anytime that an A is broken, you're looking for a crown or you're looking for a consolidation, because if it breaks both ways, then that means that it's basically a consolidation. This A broke to the downside and it was expected to be bearish and create a bearish crown. But since then, it has pushed back up towards its overall levels. So you're going to end up putting a fib down here at the fractal low and see where we are. It has broken a 2 hour D extension. The market is expected to be able to fall. That's the reason why the market's in the sell zone. Okay, so that's where we are when it comes down to this position. We're going to wait and see what happens off of this move. NASDAQ 100. NASDAQ 100. We expected that this market was going to end up making a bearish crown and fall down just slightly as a little move to the downside. And Ever since Twitter fingers end up happening and all the news end up happening for the non-stimulus check, the market ended up making one huge move to the downside and then pop right back up to the upside. My problem with this was that, and I'm just talking from my personal self for trading, I end up creating a video saying that we need to watch out for this overall news, because typically this news goes against the overall thought process of what the action was. The action was bearish on the first move, so we expect that we should be seeing bullish movement towards the rest of the move, and that is mainly towards currencies, not necessarily equities, and being able to look at what's going on with indices. So you look at what happened with the Nasdaq 100. The market ended up having that huge move to the downside. The market ended up having that huge move to the downside, where the market ended up hitting 11,000. What was it? Let me go back to the daily. We got this on a 2-hour chart already. There it is. Market ended up making a huge move to 11,239, and to be honest, I bought at 11,239 and did not stay on to that trade. If I would have stayed on to that trade, quite frankly, it probably would have been one of the greatest trades I've ever made at this particular point in time, if you're looking at it from hindsight being 2020. I bought with this position saying that I wanted to buy up to at least 11,330. I got in, and quite frankly, wasn't confident enough in the move based off of some of the stuff that I ended up seeing, at least at that particular point in time. And since then, the market has jumped up almost 300 points. So once again, that's trading. Sometimes you really have to trust your plan. If you don't trust your plan, then that means that you're putting yourself into a bad position. So I tried to compensate by basically trying to get into other trades, and it was trading to the opposite direction of what it was happening. And the market has pushed back up. The market is expected to go up to 11,721. Currently, right now, it's in the no trade zone. If it does drop down to the 2-hour, does drop down to a 2-hour 50-day moving average, then I may be interested in being able to trade it. But I don't think I'm going to be interested in trading anything until Monday and being able to go from there. But market is considered to be bullish now. 11,721 is the overall position to be able to pay attention to. All right, so there we go. I want to take a look at the US yen first on this overall pair. Most trading positions have been going against the US dollar. And last week, when we ended up looking at the US dollar starting to get strong, the one that was actually strongest against the US dollar was the Japanese yen. And it doesn't seem like for the last few months that the US and the Japanese yen have basically been moving together. And obviously that's because of the trade war that has been happening, being able to figure out what's going on with that overall pair. It has been predictable, but it has had its moments where the market has been in consolidation a lot. So we have to pay attention to that. Overall, US yen is expected to fall down to 99.20, so I'm looking for selling opportunities on this overall pair. We end up getting a selling opportunity from this overall counter trend line break. We had the breakout. We end up trading it, trying to get it to the downside, and subsequently, since then, the market has popped back up to the upside, which has shown U.S. strength. Now, this is the complete opposite of every movement that has happened with the U.S. dollar, because the U.S. dollar has been considered to be weak over the course of this overall week. I'm fumbling over my words. But we also end up saying we wanted to see how this market reacted off of 106.14, because if it keeps on pulling bullish off of 106.14, then it's going to go up to 107, and this market is going to consider to be in consolidation. This market has rejected off of the point of control of 106.14, which is also where the triangle was at this particular position, and subsequently end up falling down a little bit earlier today, or a little bit earlier yesterday morning. Did not have no extension from that movement, because we could see that we had a slight break, and then after that we had a retest back up here. And I said that if we end up getting a retest price and we can be able to find something off of it, that I was interested in being able to sell it again. We haven't had that much movement. I'm not going to waste my time on this pair. There's no momentum. Remember, when there's no momentum, there's no movement. And currently that's what's happening with this overall pair. US Swiss franc was the last pair that I kind of stayed into, and being able to say, hey, if the market ends up maintaining where we are, then I may end up staying in on this buy because I believe that this is a buy long term. And kind of like what happened, this is a direct view or kind of the same type of look of what ended up happening with the US dollar index. Market broke the trend line bullish, gave you a price to be able to get into. We bought right here. We sold out right up here. We end up making all of this movement. 2 weeks ago. Market rejects again. We wait and get out of the market, basically waiting for the opportunity to be able to get back in. Market is in the buy zone. Market broke out of the buy zone. We have that. We look for the retest. We got in on the retest, and subsequently the market has basically pushed back down and made a new lower low. As soon as it ends up making a new lower low, does not matter about your overall position. It just means that the position is going to end up being lower. So you do two different things. Either you split your risk and you end up saying, hey, I'm still interested in staying in this pair, but I know I'm going to go through a little bit of drawdown, so I'm going to try to buy at a lower level so I have two trades basically in at the same time. Or you look at the underlying pair and you say, what is going on with the underlying pair? Is it bullish or is it bearish? Right now, the market is bearish. Downside again, nothing we can be able to do about it at this particular point. We are considered to be bearish off of this pair. Market is in the sell zone. Market is in the buy zone, so I'm not going to sell in the buy zone. So we are going to stay out of this overall pair. Let's take a look at the U.S. Canadian dollar. Remember, there's going to be some news on the U.S. Canadian dollar a little bit earlier. Now, there's good, and sometimes when you're trading, once again, I'm stumbling on my words this morning. When you end up trading, there are good times to be able to take losses and be able to spot out losses. And this is one of those times to where my experience end up saving me about $400 to $500 for losing. And I'm gonna explain that in a quick second. We took a look at the U.S. Canadian dollar. Same deal. Market has been bearish, broke a counter trend line break, made money on the first initial move while the market ended up going up. Subsequently, since then, the market has pushed down to the downside and broke a trend line early, took the buy from there, was up temporarily, wanted to see if we could be able to have some more extension from this move, and subsequently made a new lower low. We end up getting in based off of this overall crown that I end up seeing on the 2 hour, based off of this counter trend line break to the upside when it ended up happening somewhere around here. From there, the market ended up pushing to the downside. And as soon as I started to see it start to break right here in this overall area, I said to everyone that was in my everyone that's been in my masterclass that this market is going to fall at about 60 more pips. So you need to go ahead and get out of your position. And the reason why I felt like it was going to fall again was because, once again, when we start looking at point of control and looking at volume profile, we see that this market ended up rapidly pushing up past this position. We said that, okay, well, that's our bullish position. We were already in at that particular point, and then after that, it subsequently dropped. Once it dropped below a overall price where it has been a pivot area. So instead of being past resistance turn future support, this turned into past support turn future resistance, and then after that, push toward the downside. Now, with us having a lower profile of buying, there was not enough support for people to be able to look at being able to get out of this price. We said that it was going to fall to 91.30 and go to 91.30 very quickly. And that's exactly what ended up happening. The market ended up dropping all the way down in this overall position with this low profile for it being able to get out. So the question would be then, okay, then if you knew that, why didn't you sell? Well, the reason why we didn't sell was because our plan was, in this case, was overall buying. Now, we could have scalped the market, hypothetically, if you wanted to be able to say that you want to sell, but the market, once again, was in the buy zone. So we don't sell in the buy zone. We look to buy in the buy zone, right? And that's the reason why you have a trading plan in the first place, is because that when you set up and you have your lookouts on what you're trying to do, if it works out in your favor, then you'll be happy. If it didn't work out, then, obviously that's the reason why you trade. You trade to be able to have opportunities to be able to make funds. Sometimes it doesn't happen that way. And you look at, in this case, we end up saying that the market was going to fall about 77 pips to the downside. That's exactly what ended up happening based off of low profile. So it's still teaching material in losses. Actually, you learn more in losses than you do in wins. But the market has fell down to a position to where I said that if there was a counter trend line break, I would be interested in being able to buy again. And if we look at this from a daily position, the daily A has not been broken, and this is at the 618, which is in a sweet spot area as well. So this will be something to consider going into next week, and we'll see what happens with the U.S. dollar. Overall, if this market does break a counter trend line break to the upside, then this may end up being a solid position for us being able to get into. I want to see what happens with the jobs report before I end up taking a peek for this overall trading, but the stock will end up being right around 100, maybe right around 150 pips, with a take profit being at 470 pips. So this would be something to consider, but I would not consider it, not yet, until we end up seeing what's going on with the U.S. dollar index. The U.S. dollar index starts to get a little bit bullish, then we may end up having a trade. If not, then there's really no trade to be able to take. Doesn't matter about the risk to reward. If the market is bearish, the market is just going to be bearish. And then after that, we have to go from there. So then after that, we'll move on. I'm sorry, that was the U.S. Swiss franc. Well, it was still the same type of move. Let me show you what happened with the U.S. Canadian dollar. Somebody ended up pointing that out to me. Same deal. Same low volume profile, even way lower than what happened with the U.S. dollar index. There goes the spot of low volume profile. That's the reason why I failed. And currently right now, if you also notice, we just went into a death cross again. And with us going into a death cross again, the market is considered to be bearish again as well. So if we do have a slight retracement, we're still going to be popping off of this 50-day moving average. And now we may consider that the market is going to end up just being bearish again. So that's where we are when it comes down to that. I got time for one more pair. Let's see. Let's look and see if there's some buying opportunity before this, instead of just looking at some overall bad sales. Currently right now, if we look at what's going on, the U.S. dollar is in last place when it comes down to currency strength at the weakest pair overall. The pounds is next. The pairs that are strongest is the New Zealand dollar and the Swiss franc, and we just talked about both of those. And we just looked at them. There's no selling opportunity in both of those. The other currency pairs are basically right in a position to where they're basically in, they're stagnant. So I wouldn't necessarily look at being able to trade those. So once again, it's Friday. I'm not necessarily going to end up paying attention to a overall position. It's not going to give me the best opportunity to be able to buy or sell. So that's pretty much it. And I'm actually done 5 minutes early on this one for its overall pairing. So I guess I'm going to stop it here. If you like what we end up doing, please make sure that you like the Carter Cow Capital business page. Please make sure you go to Carter Cow Trading on Instagram. Make sure that you end up liking the video and posting a comment when it comes down to that. Also, please make sure that you subscribe with Trade with Travis on YouTube. We end up doing videos like this each and every morning and trying to find overall trading opportunities. And was very good at the beginning portion of the week. We end up taking a couple losses based off of setups. You know, once again, that's the reason why it's called a setup. Sometimes it works out very well for you. Sometimes it doesn't. We thought that was high probability trade and went against us. Obviously, it's a learning lesson. We end up going from there. But we saved ourselves money on all of those pairs. So I look at that as a very positive thing. Even though we lost money, we saved ourselves on a lot of those because we ended up getting an early indication that the market was going to work, and we listened to ourselves. And then after that, we end up getting out. So we can't be mad. We can't be mad on small losses, because if we end up winning, we're going to end up having very huge wins. So that's how you end up playing the market. That's how you end up playing the game. Like always, plan your trade your plan. Once again, believe in yourself, and change will end up coming.